changes. Low level of interoperability with other platforms. Need to trust the management of a system to a third party. High complexity of the audit. Vulnerability to unintended and non-compliance changes. Cumbersome integration with other systems. High operational costs. Significant time for business process modification. And what are the reasons for above set of limitations? Technical incompatibility of data formats and a lack of open API. API does not support managing using cryptographic methods. Lack of strict ordering of transactions as well as of transactions integrity verification. Final state of the database is by default considered the main source of data, making it difficult to trade the causes of errors. Vulnerability to malicious actions. Impossibility of synchronous and atomic updating. Let us understand the asset tokenization with a simple illustration. John owns a property valued at $1 million. He needs to raise $50,000 for some need of his. He cannot do that by selling his property. His need is way too small as compared to the current value of the property. He wouldn't want to mortgage it for just $50,000. So, even when he owns a fantastic property, John has a liquidity issue. On the other hand, we have Liz who has $10,000 to invest. Can she invest in John's property? Not in the current scheme of things. John's property is way too costly for her. So, in the above illustration, possibility of a trade is nil. Now, let us assume that there is a method available for John to divide his property into, say, 1,000 tokens of $1,000 each. Now, Liz can invest her $10,000 in John's property. The beauty of such a trade is that the property remains in the name of John. He remains the rightful owner. Liz is able to invest a small amount she has in a property that is much more costlier and in her opinion is going to be of higher value in near future, giving her better returns. And for John to raise $50,000, he has to only sell 50 tokens. Do we realize what kind of potential we are talking about here? Suddenly, all the value locked up in costly real estate, art, artifacts, land, and many more such assets opens up, resulting in massive liquidity generation and economic growth. Let us look at some of the benefits of tokenization. For investors, democratization of investment opportunities, fractional ownership, disintermediation, direct or peer-to-peer, no middlemen, improved settlement times by order of magnitude, not little but many times over, or should I say shorter. 24/7 markets, no closing bills, no holidays. And the benefits for issuers? Increase access to capital, and that too on a global scale. Unlocking enormous pools of liquidity in the system. Lower costs of operations and transactions. Creation of vibrant secondary markets for illiquid assets. We have already seen how real estate can be tokenized and benefits thereof realized. Let us look at another use case among many of tokenization. Tokenization of commodities. Is tokenization possible in oil and gas industry? Of course, the answer is yes. Venezuela's government had issued its oil-backed cryptocurrency already in February 2018. The token called Petro is backed with the country's natural resources reserves. Namely, Petro tokens mean the share of tokenized oil barrels. Swine Incorporation is an energy company. They have decided first to acquire oil and gas leases, afterward to release security tokens that will be a tokenized shares of stock in the company. The team has acquired 18 oil and gas leases in the Illinois basin in just 18 months. A British company, R Fintech, created Biller. They have gone further by creating an entire biller market. Their product is a simple trading platform where people can purchase, hold, and exchange tokens based on energy commodities. For example, 1 BRE is equal to 1 TOE is equal to 6.481 oil barrels. In short, the easiest way to tokenize such assets as oil and gas is to sell the share right by using smart contracts. And can we leave the gold behind? No. Tokenization offers a new way to own a safe haven asset while not having to buy it. Blockchain-based tokenization of commodities and especially gold will bring in transparency, speed, security, and will slowly but surely remove any dependence on intermediaries. Digital gold assigns ownership in the form of digital token, representing physical gold bullion, removing the onus of custodianship, insurance, and safeguarding gold holdings from investors. An example of gold tokenization project is DGX. Each DGX token is 1:1 gold backed and one token represents 1 gram of 99.9% gold from London Bullion Market, association certified refiners with gold stored in safe house vault. Purchasing one DGX token is equivalent to purchasing actual gold.